Retiring off dividends is a dream for most dividend growth investors out there, and even the thought of having enough earned income through dividends every single year to be able to cover all the bills is more than enough of a reason to keep buying stocks and ETFs to hopefully achieve this dream later on in the future. Now in this video we are going to go over one of the most popular dividend growth ETFs for long-term investors and explain exactly how much an investor would need to buy of this exact ETF in order to completely live and retire off the dividend income. Now stick around, drop a like down below, and subscribe for more future content like this. So before we go over the exact numbers and see how much an investor will need to buy of this specific ETF in order to retire off the dividend income, let's first introduce which ETF we're talking about. Now we're talking about the Schwab US Dividend Equity ETF known as SCHD. And before we dive into the performance of this ETF and why this ETF is so popular, let's head over to the Schwab website and learn a little bit more about the ETF and how it works. Now the Schwab US Dividend Equity ETF has a very simple objective. It's to track as closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 Index. And this entire index is made up of around 100 different holdings that all pay dividends, are sustainable companies, and raise dividends consistently. Now the reason on why I think that the SCHD ETF is one of the perfect ETFs for a long-term dividend growth investor to buy into is because it offers all of the following things. This ETF has grown in price over time very consistently. Over the last 10 years, it's basically doubled more or less. But on top of that, this ETF offers a nice starting healthy dividend yield of around 3.5% to 4% as of right now, and maybe most importantly has had massive dividend growth historically. Now dividend growth rate is one of my favorite metrics when evaluating an investment because it shows you how much the stock or ETF has paid as far as dividends historically. And looking at something like the SCHD ETF, over the last 10 years, the dividends have been getting bigger and bigger substantially. Now this is so important because if and when you choose to retire and you have, let's say, a boatload of shares of SCHD, you will then hopefully be able to be at a point to where you can live off the dividends and not only live off them, but hopefully if history was to repeat itself, you're going to get paid more and more as time goes on, which is going to hopefully even better impact your life. But to look a little bit deeper into some of the top holdings for the SCHD ETF, in case you might not know, some of the top holdings are companies like Amgen, like AbbVie, Chevron, Merck, PepsiCo, Broadcom, Verizon, Coca-Cola, Texas Instruments, and Cisco. Now what's cool about SCHD is if we were to look through all the different holdings within this portfolio, it's a very diversified basket of holdings, and although in my opinion not every single one of these stocks within this ETF are necessarily my favorite, the fact that there's around 100 different stocks within this basket of holdings gives an investor a nice amount of diversification so that if and when a few of the names perform horribly, hopefully the rest of the names will pick up the slack. So now that we're all on the same page when it comes to SCHD, let's take a look at the most recent performance. Year to date, SCHD is currently down around 6% more or less, trading within the range of around $68 to $72 per share over the past month or so. Now on the year time frame, SCHD is up around 5.41%, but zooming out a little bit further on the max time frame, investors that have been holding onto SCHD are more than thrilled with the performance. This ETF is up around 172% on the max time frame, and that's not even including dividends. Now with SCHD's current trading price, it's offering a trailing 12-month dividend yield of around 3.7% more or less, but the main reason why SCHD is of course so popular once again is because the dividend growth, which has been very consistent over the past 10 or so years. But now back to the topic to figure out how much an investor would need to buy of SCHD, how many shares of this ETF they would need to own in order to completely retire free and clear off the dividends. This is a question a lot of dividend growth investors have, and for good reason. At the point that an investor would reach the desired amount of dividend income per year from an ETF like SCHD, they would potentially be completely financially free and able to pay all their bills and more just completely off the dividends. Now because SCHD pays around 65 cents or so per share per quarter, and keep in mind this amount is going to differ on an ongoing basis, and considering SCHD has been paying more and more on a quarterly basis over the long term, the good thing to note is because of the dividend growth, this ETF is most likely going to pay more and more as time goes on, which is going to make your job as a dividend growth investor easier and easier, and is going to give you more and more money in your pocket most likely. But that doesn't change the fact that as of right now, on a trailing 12-month basis, this ETF pays around $2.62 per share per year. So the way that we would need to figure out what's the least amount of SCHD that we would have to buy in order to have all the dividends cover our yearly expenses, we would first have to figure out how much expenses we have on a yearly basis. Now, a quick example of this is, let's say your expenses are $3,200 per month. Let's say this includes your car payments. Let's say this includes your rent, your mortgage, So $3,200 a month, and again, this is going to change on your own living expenses. And I definitely recommend that every single one of you build an expense budget with all of your fixed expenses, just to know exactly where you're at. Especially if you are a dividend investor, this can really help to sort of cross off some goals. For example, let's say you have $3,200 a month in expenses, and out of these expenses, let's say that $100 or $200 of it is a cell phone bill. Now, what's cool about dividend investing is you can try to work your way up to a point to where you say own enough stock or ETF to where your dividends then cover your entire cell phone bill. And keep working your way up until hopefully at some point your dividends are going to be covering every single bill that you have. And at that point, you'd be financially free. But to get back to the topic, $3,200 a month, for example, times 12, which would be how much an investor would need to earn on a yearly basis. $38,400 on a yearly basis for this one example. Now, once again, because the SCHD ETF pays $2.62 annually from dividends alone, what we would then do is divide $38,400 by $2.62. Now, this would give us the amount of shares that we would need to purchase of SCHD in order to completely live free and clear off the dividend income alone. Now, because SCHD is currently around $70 or so per share, the investor as of right now would need around $1,025,954 invested into SCHD as it sits right now to become financially free today, if they had around $3,200 in monthly expenses. Now, I know you're probably saying, well, that's a lot more money than I'd be able to invest into SCHD as of right now, and there's no way I'd ever be able to become financially free off of the SCHD ETF, but that's just not necessarily the case. You see, if we type in some information in the dividend calculator, we can see the power of compounding take place, and I can show you exactly what it's going to look like later on down the road. So if we were to buy around $10,000 worth of SCHD ETF, which has an initial starting dividend yield of around 3.7%, an annual expected amount of dividend increase of around 8%. More or less, this could be higher or lower, of course. An expected annual share price appreciation of around 3%, 30 years invested, quarterly dividends paid. A $10,000 contribution on top of that and dividend reinvestment turned on. Let's see what we get. So this right here is going to show you year by year how things are going to look, and keep in mind this is of course going to look different if you start off with much more than 10,000, if you start off with much less than 10,000. This is just a video to explain to you the math and how to break things down, because when I started investing, I wish I would have came across a video similar to this, so I could have typed in more so my information and had an idea if or if not I would ever be able to reach financial freedom and what it would really take. Well, for example, this investor starting with $10,000 would earn around $375 per year in dividend income. Now, obviously, this is not enough to live off of, not even close, but by year number 2, just doing all the things that we typed in above, this investor would already be up to $811 of annual dividend income. Now, keep in mind, our goal here is to be able to live off of SCHD with the least amount invested as possible. That's the goal here. So by year number 10, $119,000 is the portfolio value or something like that, and already $6,600 per year in dividends. Now, what's happening here is the power of compounding is taking place, and as time goes on, the portfolio is growing, the yield on cost is going up, because of course the SCHD ETF has a very healthy dividend growth rate, which basically is going to be paying you more and more as time goes on. At least that's what it's done historically, so that's what we're going off of. By year number 20, if an investor just started with $10,000 and did all the things we said above, this investor would already have $46,000 of annual dividend income. So keep in mind, if an investor just started off with $10,000 and did everything exactly how we put in the dividend calculator, this is exactly what they could assume, just going off these numbers at least, by 30 years in, $1.8 million of SCHD and $289,000 in annual dividend income. Now, the cool thing about this is that if you add more per year, let's say you have a second job, or let's say you have a side hustle, let's say you start a business, you can add more per year and buy more SCHD. You could, of course, add less and spend more money along the time of your life. But the cool thing is that the power of compounding kicks in, and this investor is going to be sitting very, very pretty later on down the line, because the power of compounding is truly a beautiful thing. So the absolute lowest amount of SCHD an investor is going to need to buy into is going to depend on a few things, whether or not they're looking to so-called retire today or later on down the road. But either way, no matter how you look at it, one thing's for certain. A high-quality dividend growth ETF like SCHD, and there's also others out there, could definitely get an investor to where they want to be in the future. But now I want to hear from you guys down below. If you're currently investing in the stock market, if you're currently buying things like SCHD ETF, how many years from now is your current desired retirement goal? Comment down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.